Well, welcome back, everyone, and welcome back to those that are returning after a long holiday weekend celebrating Independence Day last Thursday. The market has started off this week with a bang. It's a slower rise, however, higher all-time highs have been made. We got some inflation expectations from the New York Fed that came in a little under the consensus, which was somewhat positive. However, the consumer credit data that was released later this afternoon did come in above the consensus, and it implies consumers are extending themselves again. And that can become a problem, of course, unless rates are coming down sooner than later. Tomorrow, we're going to hear about that from Powell at 11 a.m. Eastern Time as he testifies on Capitol Hill and gives us his views, and questions will be asked and answered. So that's going to be an important moment for him to solidify. Is he in support of the market to continue growing? And does he see risk for a recession, risk for a slowdown, or the consumer getting a crunch? How's he going to position that? Of course, we have to understand that there's a political overlay to this year overall, and clearly Powell tried to pivot in December. That didn't work, so we're going to attentively listen tomorrow. The insight, though, is it's unlikely that he's going to make a policy-related change until data does show inflation coming into the areas that he's interested in, closer to 2%, or a crisis presents. Now, my view is that this market is heading towards a crisis. However, timing of that is of utmost importance. As long as there's liquidity and money is still at a similar cost, well, the market continues to see opportunity to push up. And technicals will validate that, as you'll see in a moment. Now, in this video, I'm going to really focus on multiple time frames to give you a view, but I want you to really anchor the idea of this Wednesday, a 10-year Treasury auction really sets the tone. If it does really well, we can see disappointment on Thursday. The CPI data, inflation, consumer inflation data on Thursday, and the PPI data on Friday from the U.S. markets, they have some risks, and those risks are to come in potentially warmer than the consensus is expecting. And that could then create a disappointment. Overloaded, overdone, 10-year auction that does really well could hit a wall in the very next day. Now, I do see in this market week the potential for that, but the technical signals say that it may be a modest pullback and a continuation higher would be signaled. Let's go take a look at that. And let's also keep in mind this Friday, we do have earnings season for Q2 really kicking off in earnest this week with JP Morgan, Wells Fargo, Citigroup, and a couple of others. When you take a look at the charts on screen, there's a lot going on. Essentially, I'm going to bring the daily chart into focus. Each bar represents one day. And what you have on screen primarily is the Champion Trend Pack Toolkit. This toolkit has a sequence of signals. This toolkit's a powerful combination of a suite of indicators developed by Rob Hoffman over decades of experience, and competition wins. This is a competition-tested, award-winning toolkit on WealthCharts and available to Wealth Charters with the Ultimate membership. When you look at the screen, there's a couple more indications on here, but the primary focus will be the Champion Trend Pack, the Champion Cross Indicator, opaque green zone, Champion Trend, buy zone trail lines like the Guardian. You do have individual signals from things like Range Breaker or these breakout forecasters. And where we are at the hard right edge is really what I want to focus in on. I've got a slower rise, but one that is coming up into an area that may be a challenge. And that is the top of this 2 standard deviation regression channel that we have been in since October of 2022, where the dollar truly topped, market truly bottomed, and the movement up towards the top has been thinner and hollower, fewer and fewer stocks, as we know, have been getting us up to those highs, and that's still the same case. So is this market just seeing an absence of sellers? They've been burned out. Are we seeing enough buyers available to keep pushing it up? Is this a fundamentally healthy area for big funds to continue, or do they just have to follow the index move? And it's more of the latter, but it's our concern as to whether or not they're likely going to slow down in their buying sooner than later. And it's also our concern to have definitive big tracks that are laid down. So I've got 2 other time frames on the screen. You've got the daily in the middle that you're just looking at. I've got a weekly and a 4-hour chart. Now think about it this way. The weekly chart sets down those big technical tracks for the swing traders. The daily chart is the navigation within those tracks. And then the 4-hour chart is the immediacy of swing movement intra-week. So a 4-hour chart looks out typically 3 to 5 days in terms of where it throws its signal. A daily, 1 to 2 weeks, and even up to a month. And a weekly chart goes out potentially even all the way to a quarter. It's a month to a quarter. So what I'm trying to narrow down here with you, and what I'm going to go into a lot more detail on during the presentations I do during the Wealth 365 Summit, starting next Monday, July the 15th. I'll get you an invite to that in just a moment here. If you're not already registered, better get in there fast. What I want you to kind of leave with here is between now and Wednesday afternoon, the market does have some chance for some softness, but Wednesday afternoon, if the bond auction goes well, we could complete this move, and there's several dollars of potential upside on the table, getting up to the top of that, of course, 2-standard deviation channel, and typically it would mean a poke above. But a pullback, where could it take us down to? Well, the weekly chart, it's got those bigger technical tracks. Coming down and breaking the fast speed line, which is a blue line I'm tracing right here on the weekly chart, well, that opens the door for a push down into the champion cross buy zone. And you can see that the very top of the buy zone is sitting at that 542 area. Well, let's take that over to the daily chart and take a look at where we could pull back to, where we typically would see a bounce up again, usually. Okay, this is, of course, not the most normal market, but take a look at that. You know, we pulled down into the bottom of the champion cross buy zone and perforated it, but closed back up in it, and up we went. And that's how that tool is designed to work. It's designed to help keep one in a trade and or incrementalize. Now, the simple thought here would be a push up that is hollower, less stocks, less breadth, thinner, pulls back, and a move down to that 542 area, quite symmetric with the weekly chart. The question now is, after determining that, are we more likely to do that this week, in the next several days, or in the next handful of days to 2 weeks? Well, the 4-hour chart really looks out the next 3 to 5 days. So it's about this week. And as a swing trader, one wants to get that market direction on their side. And of course, there are going to be individual names that don't require that market move. They may not even be in the index, or they just are doing their own thing. The majority of things that we trade are influenced by market risk. And market risk is going to grow and grow and grow the farther up we go and stretch this elastic band. So several dollars of upside that could take us towards that $559 to $60 area, with certainly my expectation would be some pause in the 557s at the top of that channel. And a pullback from there would more likely happen when we start to see a clear compression of the champion cross buy zone on the 4-hour chart, a flattening of the slope of the MSR channel. Okay, right now, what we've got is the beginning of that, and it's more so identified by the speed lines. You can see that fast speed line, the blue line, is starting to flatten out, or at least tilt up at a shallower clip. And you're also seeing the same from the slow speed line. Nonetheless, we are remaining on buy signals into the end of this trading day. And my synopsis here is several dollars up, with then potential for a pullback down towards the mid to lower 540s. That's where it stands at this moment in time, with, of course, a lot of vigilance when we're at these rarefied air levels. Making sure that one is protected is of paramount importance. I'm going to be building and diving deeper on exactly what you're hearing me talk about now. In fact, I'm going to focus in on things like the Spike 2.0 tool, which can really give us momentum, the gauge of it when it's starting to speed up or slow down, and how much fuel is available to actually keep us going in that direction. Are we running out? And is it imminent that we are more likely to pull back? Well, these are the types of things, along with multi-time frame analysis, using the Champion Trend Pack, that I'm going to dive deep in on with you for swing traders, for day traders alike. Looking forward to seeing you at the summit on Monday, July the 15th. It's a Power Pack Summit. We've got incredible speakers, incredible news, incredible announcements, and you're going to learn what real traders that put real money at risk day in and day out are looking for in this market, and how they're using tools and strategies. I'm going to be doing the exact same thing, sharing my tools and strategies, giving you my insights, and I look forward to do that with you first thing. Well, actually, I'm going to be presenting mid-morning, but first day of the summit, 11 a.m. Eastern Time, and simply go to joinziad.com. Get your seat now. Looking forward to seeing you there. It's going to be the most incredible summit. It's a do not miss summer event. Have a wonderful rest of your day, folks. And looking forward to seeing you in videos just like these in the near future. Bye for now.